In this example, we're going to analyze GBP USD using multi-time frame analysis on 3 time frames. So we're going to look at the monthly time frame, the weekly time frame, as well as the daily time frame. So whenever we analyze the market, we should always start with the higher time frame. So in this case, we will start with the monthly time frame. Okay, so looking at the monthly time frame, we are in a downside move. So price made an impulsive move downside, then moved up, creating a lower high. And then after this lower high, price impulsively moved down, breaking this support level. All right, so we made a lower low. Now at this point, we can assume that price will pull back to create a lower high. So this lower high ended at resistance level, and this resistance level, looking left, acted as a support. All right. So after this lower high, price aggressively moved down, breaking this previous lower low. So we made a new lower low. Now at this point, we can assume that price will enter into a corrective phase to create a lower high. Now, at this current price action, the question is this our lower high and price will continue to go down, right? So we have to see a bearish price action, all right? So first, price is currently at resistance level, all right? So looking left, this was a previous support, now acting as a resistance. So what else? We also have a bearish rejection candlestick. So we have a high test reversal candlestick. Now, uh, at this point, our bias will be on the monthly time frame is bearish. All right. So we analyze the trend. So we are in a downtrending market. So lower high, lower low, and then possible lower high. We are currently at resistance level, and then we also have a bearish reversal candlestick. Okay. Now we have to confirm this bearish bias on the lower time frame. So we will now look at the weekly time frame. So as you can see, price is coming from an uptrending market. So price is making higher high, higher low, higher high, higher low, higher high, higher low, and then price established a resistance level right here, forming a double top, which is a reversal price action pattern, right? So on the weekly time frame, our bias is bearish, right? So since price created this bearish price action after an uptrending market, so there's a possibility that this uptrending move is about to end and we will now see a downside move. All right. Now, to add confirmation to our bias, we can now look at the daily time frame. Okay? So we have to see a bearish price action. Okay? So coming from an upside move, price moved down, then moved up, established a resistance level right here, rejected once, rejected twice. So this is our double top on the weekly time frame. Okay? So price also made an ascending wedge, which is a reversal pattern, right? So ascending wedge at resistance level is signaling a reversal, right? So as you can see, um, this pattern is already confirmed by breaking down this trend line support. All right. So on the daily time frame, we also have a bearish bias. Okay, so the monthly time frame is bearish, the weekly time frame is also bearish, as well as the daily time frame. Okay? All right, so let's see what happened next. Okay, so this is our monthly time frame. As you can see, this is the high test reversal at resistance. After that, price moved down. All right. Weekly time frame. This is our double top. Price reverses its trend. So from uptrend to downtrend. And then on the daily time frame, so this is our weekly double top, our ascending wedge, and then price reversed. All right. So again, uh, when using multi-time frame analysis, different time frame should confirm your bias. Okay. In this example, we're going to analyze AUDJPY using the monthly time frame, the weekly time frame, and the daily time frame. All right. So we will start with the monthly time frame. So as we can see, price is moving down. So basically, we are in a downtrending market. So we made a lower low, lower high. Price breaks through this support level, then made a lower low right here. So at this point, since this is our lower low, we can assume that price could possibly go up into a corrective phase and then establish a lower high. But the question right now, at this current price action, is this our lower high, right? So we have to see a bearish price action since we are in a downtrending market. So at this point, let's look at the level, right? So is this a resistance level? Let's try to see looking left. All right, so we have a rejection here before as resistance, and then here as support. So this is a good resistance level. Okay. Now, do we have any bearish rejection? So we have this high test reversal candlestick. Okay. So that is showing us or signaling us that we may see another downside move. All right. So our bias here on the monthly time frame is bearish. Now we have to see a bearish price action on the weekly time frame. So looking at the weekly time frame, price coming from an uptrending move. So we have our lower higher low, higher high, higher low, and then price formed an ascending wedge. Okay, ascending wedge, and then we also have, or we already have our confirmation here. Price breaks down. All right, so our bias for the weekly time frame is bearish. Okay, now going down to the daily time frame, we should see a bearish price action. So coming from an upside move, price made a higher low, higher high, higher low, and then a lower high. So what pattern could we see in this price action? So we have our left shoulder, head, and then right shoulder with an upsloping neckline. All right. So since this is a bearish uh, head and shoulder pattern, our bias on the daily time frame is bearish. Okay. So monthly time frame is bearish, weekly time frame is bearish, and the daily time frame is also bearish. So we can expect a move downside. All right, so let's see what happened. So on the monthly time frame, this is our high test, and then price move down. All right. Weekly time frame, this is our ascending wedge, price move down. Okay. And then lastly, our daily time frame. So this is our head and shoulder reversal pattern. So after price breaks this upsloping neckline, price eventually move to the downside. All right. So three time frames shows us a bearish price action.